Hello and welcome to Analyzing Finance with Nick. By popular demand, I am bringing back Chris Street. He did an excellent discussion with us about the economic future of California. So now he is going to be returning to talk about not just the future of a region, but the future of the global labor market and what is going on in terms of the bigger macro implications on some of the changes that he sees in the global labor market. Before we get started on that, Chris, just give a brief summary about who you are and how you developed your expertise in macroeconomics.
Well, I started out as a stockbroker and managed to sort of hit on some really good analytical skills I had. I was really a math and physics major and was able to apply that as back in the 70s and 80s when, mathematical quantitative analysis took off. I was the right guy in the right seat and did very, very well. And what I learned from that experience is how absolutely you become wrapped up in your whole world, and that's all the way you can think. And of course, then along came 1987, and wow, was that a what kind of slap? Because all of that quantitative theory led you to, portfolio decisions that worked between the late 70s and all the way up till the crash, and it didn't work at all. In fact, I was such a big player. I could go to New York and get to walk around the New York Stock Exchange. My $2 broker, they call it, would walk me around, and I had even taken my son in his stroller on the exchange, which is completely banned to have any children there. But I got away with it, and I thought I was pretty cool. And I was supposed to go on the floor the day of the crash, and so I'm there, and the guy comes out to meet me at the front. And he just goes and walks away. And I thought, who do you think you're talking to, dude? You just lost a ton of. Wonder why he did that. Why would he lose that much money in commissions? I went upstairs to the viewing area, and you can look down. There's a big glass wall. You look down, and the tape had opened an hour and 45 minutes behind. So everything that works on quantitative analysis didn't work at all if the tape can't keep up. So that was a explosion to me that said, hey, there's something we don't understand here. And I took that experience and built another business, a business of shorting stocks and restructuring bankruptcies, because there you had 100% of all the information. I mean, I'm watching FTX go down. It's hilarious that it starts to go down and people just don't think it's going to go to zero. I mean, where else could it go? And how it could not. So I went through these experiences in life. And in 1993, I discovered that Bob Citron, my client, treasurer of the county of Orange, I was doing investments for the pension plan and buying huge amounts of bonds. On the other side, unknown to me, he had taken the payroll account of $6 billion, all the city's payrolls, and leveraged it 4 times to 24, 26 billion. I found out about it, and I asked Bob, and he said, well, I know these things. Interest rates are going to go down. And I just looked at the phone and went, oh. So I started chasing him. And for a year, everybody attacked me. Eventually, Orange County filed for bankruptcy. And in that process, the whole world sort of changed and learned about derivatives. I went from that to doing my usual turnaround companies. And in 2006, I decided to run for the treasurer's office of the county of Orange. And I just so happened to get in there when the whole world of government fell apart in 2009 and 2010. And I sat on the 5-member treasurer's advisory committee to the state treasurer who was trying to make payroll. So these are kind of my experiences, Nick. So I'm not your average bear in the woods.
So with that in mind, I think we talked about in our previous conversation about the economic future of California, and you had some very interesting comments about that. But instead of an economic future of a specific state, we're going to be talking about just the collective labor market, which I think you have an even more interesting and heterodox opinion on, and that is the commodification of skilled labor, especially in the technology industry. So why do you think that the tech workers are at risk of becoming minimum wage level jobs in the decades to come?
Because I grew up in Santa Clara. My mother was the first woman city council member in the history of the town. And I was there when all those corporations, came to Santa Clara. People do not understand that Santa Clara belongs to a 6-member energy pool structure that was set up in the early 1900s that buys cheap power. Santa Clara, Palo Alto, parts of Sacramento, Modesto, and Redding. So I had a pretty good view of how all this worked. And my dad was the top engineer at the second largest employer in Santa Clara, and that was called Chemical Systems, that made rockets to go to the moon. So I was 12 years old. He'd take me 20 miles south of Santa Clara in a place called Coyote, turn a 200-foot rocket upside down and have the biggest candle you could ever imagine. So in the process of doing this, I saw the town, how it grew. My dad was one of 165 engineers and a boss. And 3 years later, in the same company, there were 3 engineers and he was the boss. Would you call that kind of change that can take place in technology? It's not stability. So my belief now is, just like what shellacked Santa Clara, this is back in the late 60s, just what shellacked Santa Clara in the late 60s, that same kind of cycle is starting to hit. And you're seeing it now just absolutely raging in the Bay Area, raging in places like Amazon. So and the term commodification has to do with 2 sides of it. There's the machines, and then there's the cost. And up until now, people have valued people because the machines weren't there yet, and the costs weren't there yet. They could get this margin; it wasn't a problem. And all of a sudden, that margin is going away, and it's getting commodified in the form of replacing people with machines. But more importantly, it's replacing people with less people. You're exposed to now, if you're an engineer and all your friends get fired, you're probably going to work a little harder. What do you think, Nick?
Yeah, but wouldn't the engineers that are remaining have that much more value because they are responsible for a lot larger chunk of the economic activity of the company?
Yeah, that's what you'd think, except that people have to eat each week. So when you get these big cuts in and you get somebody starts looking at the bottom line, they're losing their margin. You complain, you're gone. You better be nice and not complain, and you'll be the last guy there. So and we're really, America goes through these cycles that are very, very vicious. And each time, the new fools them, and they think this is just the way it's supposed to be. In 1890, the United States was just coming out of a real depression. You'd had the anarchists and all that. You'd had a tremendous amount of turmoil, and then you went right into the, oil's discovered in California, and you start another boom, and it goes all the way, and it blows up again in the 30s, and they're bringing out the army to shoot veterans. They're blowing up things. It's every about 45 years, America goes crazy. Went crazy in the 60s when I was a kid. So it's just this is that crazy period where all of a sudden it isn't easy for companies to make profit, and people start getting whacked. And the ones who are going to get whacked are the ones that were the winner in the last cycle, and they're the easiest ones to whack.
So then how does that translate to, though, the remaining surviving people in industry having their marginal productivity collapse to the point that they are considered unskilled labor? I'm missing a link there.
Well, no, there's no bid. The market has no bid. all of a sudden you were getting called by, headhunters, and all of a sudden the call stopped, and then they start whacking people. The headhunters don't have a pricing down structure. People bid for jobs and then they don't bid for jobs. And when they bid for jobs, they're really willing to pay almost anything. And when they don't bid, they're willing to pay nothing. Doesn't matter how cheap you'll offer yourself. As you go out the door begging, please keep me on the payroll. I'll cut my wages. Nobody cares. And part of that is, remember that this cycle was about service. That you can handle services and transactions and integrate with globalization. I mean, globalization is dead as a doornail. I mean, last summer there was 49 docks at the port of Los Angeles and Long Beach. They were all full, at the end of the year last year and last summer. And in fact, there was about 100, 150 standing offshore. There were 11 yesterday, and I believe there's 8 offshore. It's gone. And this is the strongest time of year for retailing, isn't it, Nick? Isn't this when people get their inventory and they're going to sell it?
Yeah, July to about November.
Yeah. So I mean, right now it should be as good as it can be for service industries and the global economy, except the global economy ain't there. And it's not anybody's fault. It's just the cycle is over. And I think what comes next is a cycle where the people who have these communications, transactional, programming skills, they're no bid. They don't have any experience in manufacturing. We're going to make everything here. And these people have never made anything. They live in cities. They don't live in towns where they have factories.
Yeah, that leads me to 3 follow-up questions. The first one is, will the crypto bubble and the amount of human capital that, especially among my generation, who dedicated their lives to this as their careers, will be the biggest waste of human capital in human history?
I'm not so sure about that. I think that your generation's getting the ultimate haircut. You bought into the fraud that that this was going to replace the Fed, and that this was modern and young and broke all the rules. Well, now the rules you're finding out the rules had value, and so we've seen FTX, and there's any kind of guess what that kind of money is. Originally, it was 7 institutional investors, right? They got clipped for what, $2 to $4 billion, and then it was there was 100,000 participants in the market, and now it's over 1 million. And today, I believe it's DeFi, is that right? DeFi is about to file bankruptcy, and they admit having close to $8 billion of loans to FTX that have all gone away, because FTX basically was a Ponzi scheme that bought, you're supposed to be as a, the guy in the corner, always a pusher, never an addict. He's not supposed to use crack. These guys took the money and bought more crypto. And so if it's gone away here, it's gone away there. And we're going to find that the numbers here aren't the 2 to 4 to 10. The numbers are going to be 100 to 200 billion dollars. Real money.
Yeah, it'll be interesting. And once that comes out, we may have to do a follow-up to this. The next question, though, I have is, labor productivity has consistently gone down since the 80s worldwide, and it has even reached negative levels. I talked about this on Financial Sense NewsHour a few months ago in 2022 for the first 2 quarters. So why is labor productivity collapsing? And if now software, which is one of the few places where labor productivity was positive and growing, is no longer going to be a productive part of the economy, what is going to be the productive part of the economy?
I love math. It's so fun, because you got Americans are stupid and their productivity goes down because they don't work hard, right? I mean, that's kind of what the story is.
Well, it's not just America; it's Western Europe and Asia too.
The Frenchies are stupid. The Brits are stupid. They're all stupid. They all, in the last 30 years, they got stupid. They must be stupid. And the Asians, they must be so smart because they all wear glasses, right? In Asia, you go to a meeting, everybody's got glasses on because but let's sort of break that down. Productivity and profitability. So productivity is supposed to go down here, so profitability is down, right? That's not what you see in value added in big corporations. What you see is labor productivity has declined dramatically from about 4.5% to you're right, 1 to 1.5%. So it's gone down by 2/3. But at the same time, profitability value added, profit as a percentage of value added in big corporations has gone from about 4.5% to close to 13-14%. So what that says is that $14 trillion got invested over there, China and the rest of it, and no money got invested here. So when you do that, you're using old equipment, old machines, old processes. You're not buying big metal lathes and such like that. That's done over there. The modern top stuff is done over there. So their productivity is really leveraged by the investment, the equipment. It's the productivity on the machines, whereas you've taken that out. Now you're going to turn around, and this is why people really hated Trump, and this is why they would do anything to keep him out of the game, because they understood that if Americans woke up one day and said they are subsidizing China and doing it with getting their wages cut dramatically and allowing unlimited amounts of imports. Now we are, certain people, that are important got paid, So I don't know if that answered your question, but it's fun to think of the idea that, when people wake up and they start bringing the capital back here and they buy the new machines and the modern processes and all that comes here, I think productivity of U.S. workers is going to, productivity growth will probably quadruple. I mean, it's the greatest opportunity for margin versus anything else, because there is no globalism opportunity for margin. That ship sailed.
So you think that robotics and innovations and automation and just other modern improvements in manufacturing in the last 30 years will be the onshoring boom? Is that where the labor and just the American economy will be reallocated away from the world of, like, I like Peter Thiel's quote on this, from the world of bits to the world of atoms?
Well, material science is also coming. That's what he's talking about. But when you talk about, you're not going to have these big China factories that go for 5 miles. They just, you don't need that. You're going to have smaller factories. You're going to have them more localized by the customer base, and they're going to be very, very productive because they'll be very responsive to the market because they'll be at the market. So I think you're going to displace 5 Asian workers for every 1 worker that joins here in the U.S. So these 5 guys go away, and this 1 guy, steps up. So, and the productivity of that 1 guy with all of that robotics and automation and such like that. If you've ever run a factory with robotics and automation, I have, and your robotics does something wrong, it does something wrong. It consistently does something wrong. So people are very risky to completely replace. I think they're, and if you put money into them, they become amazingly productive. I mean, take a look at a car 10 years ago you were driving, take a look at the car today. It's amazing, the differences that, we could be having this call, and in 5 years, we'll be doing this. I'm sitting in the back seat, and going down the freeway, and we're having these kind of calls, and the car is the chauffeur. So I'm okay with all that.
So then for those, say, like younger professionals who've so far had their lives dedicated to software, those younger people in college watching this, like, What
You
where's the
invested in the
puck going
food.
for them? What should they do with their lives if like this is what happened like when 15 years ago when I graduated from college, they said, oh, finance is dead. You have to go into tech. And since I like this profession, I went this direction anyway. But I probably was swimming upstream a little bit. But for those, so like if people are now saying, oh, tech is gonna fade into history and just go back to its normal size in the economy or smaller, where's the hockey puck going then for the next generation?
Remember, I said my dad was one of 165 engineers and the second largest employer in Santa Clara. And 3 years later, he was one engineer manager and had three employees. And then 5 years later, he was one manager and he had 360 engineers. So this is the vicious cycle of tech, period. And I call tech as whatever the new is becomes the old, and it comes back later. But these kids' parents sort of invested, in the food service industry of of their child's generation. I mean, this is going to go away for 10 to 15 years before the demand to really come back. There's these skills everybody's got. Why would I need to pay for them? I should gig it out. I can do that. I'm
Sounds
just
like what
saying
happened to the
that
IT industry in 2000 and 2001.
that's right. I've dealt with a lot of Indian engineers and companies and such like that. And I want to tell you the one problem with the Indians. Let's start out with the Chinese. The Chinese work hard for you during the day, and 12 hours or whatever, and at night they interview for three jobs. Next day they do the same thing until they get a slight increase in pay, and then they don't even show up or tell you. They just don't show. The Indians, they love the name of the company. They're very loyal. Mexicans kind of like this too, but they're with you, but they tend to be pleasers, and they don't ever want to tell the big guy bad news. So if you don't have Howleys, Americans in your shop, you get into a lot of trouble. Now that this is coming back here, I don't think these kids, have some math and computer skills and some other skills, but it's going to be a long apprentice program to get back to where they were and get competitive, because that's what people want to know. What can you do to make me money? That's the new rules. The old rules about companies don't have to have any earnings. And in fact, I lived in Santa Clara. Every cycle, the biggest winners are the ones that didn't have any earnings. And then when one of them started making earnings, like when AOL turned a profit in 99, pretty soon it all crashed. I mean, it was sort of over. If you have to actually compete again on earnings, these companies, go from trading at 300 times earnings to, 7 to 10. Why wouldn't, why right now, you have what's called the Buffett rule, Warren Buffett, and he says that stocks are a great value when the indexes, the SP indexes, are trading at 80% of GDP or below. Currently, after this big, loss of almost a third of the value of stocks, it's trading at 170% of GDP. Sounds to me that's a little rich, isn't it? Ah. So I know old guys and old things aren't popular because, they're kind of like the Grinch, but there is a Grinch.
And yeah, and speaking of Grinch, what is the Grinch may be, which I think is a result of a lot of political resentment on both sides of the aisle, is the convergence of wages of the blue collar versus white collar labor. We started to see that during the pandemic, where the bottom end of the wage curve started to see much faster increases than higher ends of the wage curve among non-supervisory employees. And if we're going to have more onshoring and therefore a lot more like manufacturing and trade like jobs to run these new onshoring factories, whether in the US and or Mexico, what is the risk that the convergence of blue and white collar labor in terms of salary and earnings continues? And at what point does this become a serious social problem?
Well, I think it already is a serious social problem. A friend of mine runs a company called Millennials 123, and their business was, retention of key employees. Basically, millennials, they answer the phone, somebody's there. Sure, I'll move. Yeah, why not? Cool, try it. That's experiential kind of thing. That's not as big a deal as it's been, about retention, and it's soon to be a much less big thing about retention because white collar and computer people, I just bid for them. I can get or I can gig it. I can gig the whole damn thing if I want. You can't gig, welding. Steel welding. If you make a mistake, you can just putty it up, melt it together, and fix it. Aluminum welding, if you make a mistake, it's called scrap. So, when you're dealing in actually making things, making them wrong, you can't normally just do the rework. It's pretty much trash. So that's why skilled people, with welding skills and industrial skills and process management skills, you just can't find them. I mean, those jobs I'm saying are coming very, very fast. You don't see them. I'm here in California. You don't see them as much in California, but I'm up here in Redding right now, and they have a big industrial zone, very large plots and 20 plots there, and only 4 of them had been leased and had been a big disaster. And coming out of COVID, 14 of the remaining 16 got leased. Why are people leasing, big properties that look like, they're not going to be distribution centers. They're going to be manufacturing plants, not the giant ones, but those ones I've been talking about. So, where they get the workers for that? Probably the companies will have to train them. I mean, you don't really think that, high schools are going to go back to having shop, right? I mean,
No.
These kids couldn't change a tire if they tried.
But couldn't like the college educated crowd just like switch instead of doing business development or project management for technology firms, doing it for industrial firms?
I mean, survival is everything, but I just don't think that, right now, they'll their strategy is hope. Hope ain't no strategy. But I think it's going to be taken a few, numbers of them will change, but most of them live where the new jobs aren't going to be. I mean, does anybody really believe that San Francisco and Los Angeles can survive in this? I mean, you wrote a piece that I loved. You said San Francisco is the new Detroit. I mean, right on, Nick. I mean, who wants to live in San Francisco, and work crummy hours in tech, and people and step over the needles on the ground and get mugged and whatever. No, I'm not where we're going to have the new jobs. New jobs are going to look for the skills that hand skills, and they're going to go to the back to the rural areas.
Yeah, I think the West Coast does have a risk of becoming a rust belt. I'm a little more optimistic in Los Angeles than you are because look at Chicago. Chicago's a rust belt city that survived and still remained relevant. And I think Los Angeles is this region's Chicago. It's still like going to be the main urban area of the West. It may not be as important as it was at its peak, but I think LA will hold on. The rest of them that are more correlated to software and are less diversified of economy than Southern California are going to have the same problems that places like Detroit, Cleveland, and Milwaukee and Indianapolis and all these other Midwestern cities struggled with in the late 20th
what's
century.
The ultimate software? Movies, entertainment. That stuff's shrinking like
but
crazy.
Even without that, there's still other things going on here.
I'm Nick. I just think it's people at that 40 miles along the coast that really coined it, going all the way up to, Marin. They're in deep doo-doo. I mean, this is, and they say, well, San Diego's not going to be hit because they're in pharmaceuticals. Well, pharmaceuticals absolutely boomed because the computer industry gave you the power and the new tools to do something by 1990 that was disruptive. I mean, it's been a long time since that. Does anybody want to talk about COVID vaccines as some, great example of, why society should put money into, the San Diego biotech field? But
And
that's not
then
where the action is going to be.
and then before we close off this conversation, do you have any final thoughts just what's going on in the world macroeconomic wise that viewers should be paying attention to?
You won't have to give people that advice to pay attention to it. It's right in their face. I mean, your generation, this FTX thing, and all of the cryptos. You think it's about young people? This already got into the real economy. I mean, there are tons of pension plans. Remember last 2 months ago when all the pension plans in the UK started to go bankrupt because they were in LDI,
Yeah, the gilt reels
liability
rallied again in
driven
their face.
investments. But how they're addressing that? They didn't sell the strategy and start doing something conservative. They're using derivatives to bolster their position in LDI and avoid getting margin calls. The only problem with derivatives is, what if there's a counterparty problem? I mean, so, real adults, if you want to say, people in their 40s to 60s, that are, they're deeply involved in cryptocurrencies, Bitcoin and things like that. They've, young people were by numbers, out there and out and proud, but a lot of people are going to have trouble come Thanksgiving and Christmas sitting down with family and saying, I just lost everything we had. And by the way, I got some margin calls here we're going to have to deal with. So, Nick, I think it's in their face, and more it's going to be in their face. I mean, the war in Ukraine is in your face. You just haven't seen it yet. But, remember, this was part of the trick to take Trump out when they said that Russians had a bounty on every American killed in Afghanistan. That was July 20th, 2020. That was released at the highest level of U.S. government. That was the coup de grace to start taking Trump out. Things kind of progressed from that to Ukraine, haven't they? What if they progressed to that, to a real war with American boots on the ground? Remember the 70s, the 60s? Wasn't pretty.
Yeah, but at least we didn't have any hot war in the United States, and I'm optimistic on that outcome's not going to happen.
Well, hot war somewhere else can be with somebody who has nukes, can really easily be a hot war in the U.S. So, Biden embarrassed in Afghanistan. He, forces the issue in Ukraine. Nobody had to do this. This is, 100% policy driven. Now, we're blowing up pipelines, or, we're assassinating, girls in St. Petersburg. We're blowing up bridges. We're talking about, blowing up dams and flooding out the Russian army. I mean, these are really in your face things, aren't they, Nick? Isn't your generation aware that this could turn out to be, that hot war, and they'd be the one that owns it?
Yeah, there's a lot of people who are concerned about that for sure on both sides of the aisle. Nobody really wants to go to war in Ukraine. I mean, and on either side, a lot of Russians, they see the number one search in Russia for Google is now breaking your arm or something, how to break your arm.
There's come on, all you big strong men. Uncle Sam's got your again, something like that. This time it's going to be men and women. So your generation's going to see the draft. You watch, and that's going to you think people are trying to get upset about personal space and gender and all that stuff. Well, wait until the draft comes. That's not biased.
Oh yeah, that'll be the 60s all over again if that happens.
All over again. It's the same cycle.
Well, with that note, thank you for joining us, Chris. Uh, we'll keep having you on. Interesting developments happen, and yeah, it was a great having you on the show again.